Welcome to the Capital Spreads weekly video. Today's Wednesday, the 17th of October 2012. And the week so far has been quite a bullish and positive one, with many equity markets rallying quite strongly. Now, there's a number of key figures and factors behind this. Possibly one of the biggest is the fact that the US corporate earnings season seems to have exceeded many analysts' expectations. Most recently, we've had figures from bellwether companies like Goldman Sachs and Johnson & Johnson, both of whom exceeded analysts' expectations. Off the back of this, we've also had stronger and better than expected economic data out of the United States. The most recent being the US jobless rate finally gradually starting to fall below 8%, a figure that's been stuck at for a number of years now. Many people are also quite optimistic over the EU summit, which is due to start tomorrow, and are hoping that it will provide further clarity for both Spain as well as Greece, two of the countries that are considered to be most distressed at this moment in time. Even this morning, the positivity has been further supported with Moody's not downgrading Spain's credit rating after the fall in borrowing costs for Spain. On top of that, we've had figures out of the UK, with the Bank of England maintaining an asset purchase programme target rate of 375 billion and maintaining interest rates at 0.5%, which was as expected. The MPC minutes also showed that they are quite mixed in terms of whether they want to continue with and increase the asset purchase programme going forward, with there being quite a split in terms of what they will do. Again, that will be closely watched going forward in terms of whether they increase asset purchases or not. Looking at the week going forward, we have a number of other figures that could certainly help move the markets around, as well as political events that many people will be watching quite closely. This afternoon, for example, we've got the US housing starts. Now we're expecting a small rise there to 770,000 from a previous 750. We've also got the weekly US crude oil inventory figures. Again, given the uncertainty and tension that we have both in the Middle East and with oil supplies generally, that will certainly be another figure that people will be watching quite closely. Then, if you're awake early enough tomorrow morning, at 3 o'clock in the morning, we have Chinese GDP figures and a number of other associated Chinese figures out around the same time at 3 o'clock in the morning. Now, the Chinese figures could certainly help define the tone for the day. We're expecting a small decline in Chinese GDP to about 7.4% from a previous 7.6%. Again, that's a rate of GDP that many countries in the West would envy and would be happy with. Later on in the morning on Thursday, we've got the UK retail sales figures at 9:30. Now we're again expecting a small decline there from 2.7% to 2.1%, while later in the afternoon on Thursday we've got the usual weekly US initial jobless claims, and we round off Thursday with the Philly Fed and leading indicators that will be coming out at 3 o'clock in the afternoon. Friday seems to be a relatively quiet day. We have the Eurozone current account figures coming at 9 o'clock in the morning, and at around 9:30 in the morning we've also got the UK public sector net borrowing, where we're expecting a small fall to around 11.7% from a previous 11.7 billion from a previous 12.4 billion. I think the focus on the week going at least till Friday will certainly be the EU summit that we have starting tomorrow, as I mentioned. Well, many people will hopefully be expecting some clarity in terms of whether Spain will be asking for a formal bailout or not, which many people will now see as being a positive. It will also hopefully provide a bit more clarity in terms of Greece, and will hopefully define what the EU policy will be regarding the Eurozone and the Eurozone debt crisis going forward. So still looking at quite a busy week, and certainly issues and figures that can move the markets around. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.